Good evening. It is time for today's Tax Talk. I'm your host. I'm attorney Stephen Leahy. It is Monday, March 13th, the year of our Lord 2023. And last Friday, Janet Yellen appeared in front of the House Ways and Means Committee. She had some interesting news to share with us. That's what we're going to talk about today. Won't you join us? So, again, Secretary of the Treasury, Janet Yellen, as the President of the United States and the Secretary of the Treasury and the new Commissioner for the IRS has been telling us all along, they're not going to, more people aren't going to be audited because we gave the IRS $80 billion. That's ridiculous. They're only going after the people who make more than that. The billionaires, the millionaires. But is that really what they're going after? So that's interesting. So here first I want to play this video that I have of Werfel at a committee hearing when he's being interviewed, or his confirmation hearing. So let's see what he says here. Let's do
From the IRS's own data, the two largest single components of the tax gap, that's the difference between taxes owed and paid, are small business income, and individual non-business income. In response to my questions, the Nonpartisan Joint Committee on Taxation told us that these shortfalls are overwhelming. They are upwards of 90%, and upwards to 90% of these shortfalls fall on hardworking Americans with modest incomes, far under $400,000. Now, Secretary Yellen reportedly has said she's directed the IRS not to use this somewhere in the neighborhood of $50 billion to enforce against people with incomes less than $400,000. My colleague, the chair, has said that is not to be done. What I want to know is, how strong will you make that commitment? The language we've gotten from the Secretary was in this term of, well, we want to get balance. I don't want to know balance. I want to know whether you are going to commit today that the plan will not allow this supersized enforcement money to be utilized against people who make less than $400,000 per year. Will you make that commitment?
Senator, yes, and I made that commitment in my official statement for the record. I am committed to Secretary Yellen's directive on how the audit should move forward under the Inflation Reduction Act, and look forward to working with you and you holding me accountable for that.
Well, thank you. Secretary Yellen's statement leaves a lot of wiggle room. I want to be sure you know that I don't expect to see wiggle room in this commitment.
Now, regarding the audits, and the chairman talked a bit about this.
I don't want that to go in there, but I thought that was interesting. No wiggle room, right? You don't have any wiggle room there. You're saying no, none. I know that the secretary and others have kind of get some wiggle room, but you're not going to have any wiggle room, right? Oh no, we're not. We don't need any wiggle room. We're okay with that. So now here's. Let's go back to that. I made a mistake there, so I started that. But let's go back to this now, where this is Janet Yellen in front of the House Ways and Means Committee on last Friday. So let's see what she has to say there. Let's see what that is. I think I have that. I thought I had that.
Now, regarding the audits, and the chairman talked a bit about this, there's been confusion about the meaning of the directive that you cited in the letter last August and then repeated here today. So are you talking about the total number of audits, or are you talking about the proportion of audits on families and small businesses under $400,000?
I'm talking about the proportion of those small businesses and families.
Okay, so the proportion, just for the record, the proportion is 90%. So 90% of the new audits will be, according to the data, that we can expect up to 90% of new audits to be on those making less than 400,000.
So that's 90%. Is that right? 90%. So it's not going to change. Well, there won't be any additional. Well, of course, there's going to be a lot of additional. It's going to be huge, right? It's going to be the vast majority of all new audits are going to be against small business people and individual taxpayers. That's what I've been saying. That's what everybody's. You can't spend $80 billion without doing that. You can't train them without doing that. You can't, and they keep couching it in these words, these Washington words about what it all means and what it's so it's disingenuous, isn't it? Just doesn't seem right. But let's go to. I wanted to do this story first because this is interesting. This is last August 11th. Actually, is this the August 11th one? Yellen directs IRS not to use new funding to increase chances of audits. But see how they even couch that chances of audit. But if she's talking about proportionally, but if more people, then my chances go up. If they're doing more audits, then my chances go up. So even though she thinks she's got a wiggle room there, it really isn't. Making less than 400,000. So Treasury Secretary Janet Yellen on Wednesday directed the Internal Revenue Service not to use any of the new funding allocated for the Democrats' new health care and climate bill to increase the chances of Americans making less than $400,000 a year getting audited, according to a copy of the letter obtained exclusively by CNN. The letter to Commissioner Charles Rettig, who's now gone, comes amidst attacks from Republicans that the $80 billion in Inflation Reduction Act would give the IRS over the next 10 years would result in more middle-class Americans and small businesses getting audited. The Biden administration has repeatedly said that the IRS would focus on increased enforcement activity on high wealth taxpayers and large corporations and not target households who earn less than $400,000 a year. Specifically, I direct that any additional resources, including any new personnel or auditors that are hired, shall not be used to increase the share. See, the share of small businesses or households below the $400,000 threshold that are audited relative to historical levels. Yellen wrote in a letter to Rettig. This means that, contrary to the misinformation from opponents of this legislation, small businesses or households earning $400,000 per year or less will not see an increase in the chances that they are getting audited. Well, obviously, even though the proportion might be the same, my chances still go up. If I'm auditing twice as many people, well, then my chances of being audited just went up twice as much, didn't it? That's the way it works. If I used to do 100 and 50 of them were small businesses, and now I do 200 but 100 are small businesses, my chances to get audited just went up. Enforcement resources, Yellen said, will instead focus on high-end noncompliance. The new IRS funding is projected to raise $124 billion in additional tax revenue over the next 10 years, which is a key way Democrats plan to offset the cost of their plan to lower prescription drug costs and combat climate change. The Democrat-controlled House of Representatives still needs to approve the legislation, which passed the Senate on Sunday after months of painstaking negotiations. Because of their narrow 50-seat majority in the Senate, Democrats use a special filibuster-proof process to approve the $750 billion health care, tax, and climate bill without Republican votes. Rettig, who was appointed by Donald Trump to lead the IRS, told lawmakers last week that low and middle income taxpayers would not be the focus of increase in enforcement action. He said better technology and customer service would also make it less likely that compliant taxpayers would be audited. Well, that's just not the truth. The truth, is it? The bill itself says that new funding is not intended to increase taxes on any taxpayer or small business with taxable income below $400,000. But Republicans continue to fiercely oppose the new IRS funding and make claims about increased audits on middle-class Americans. The Republican National Committee and several Republican lawmakers, including House Minority Leader Kevin McCarthy, who's now the the Speaker of the House, and Senator Cruz of Texas claimed the new funding will create 87,000 new IRS agents. They mean IRS employees, but that number is misleading. Treasury did estimate in 2021 that nearly $80 billion investment in the IRS could allow the agency to hire 86,857 full-time employees over the course of a decade, but that figure accounts for all workers, not solely enforcement agents, Reddick said. Anyway, what? Okay, I'll be right there. Okay, I'll be right there. This is okay, so one more. I'm just going to read one small. Yellen doesn't deny that 90% of new audits would affect those making under $400,000. When asked on Friday, Treasury Secretary Janet Yellen did not deny that as many as 90% of the new IRS audits using Inflation Reduction Act resources could come from individuals making less than $400,000 annually. Yellen testified before the House Ways and Means Committee, where she faced numerous questions about President Biden's budget, priorities, and how the IRS will be use funding that Congress appropriated in Biden's landmark spending and tax law to hire 87,000 new agents. During an exchange with Representative Smith, Yellen appeared to admit that the vast majority of new IRS audits conducted with Inflation Reduction Act resources would affect lower and middle income individuals, contrary to the promises from the Biden administration. There's been confusion about the meaning of the directive that you cited in a letter late last August and then repeated here today. Smith told Yellen, referencing her August 22nd, which is what we just referred to, letter in which she directed the IRS shall not use new personnel or auditors to increase the share of small businesses or households below $400,000 threshold that are audited relative to historical levels. Yellen's letter stated that, contrary to misinformation from opponents of this legislation, small business or households earning $400,000 per year or less will not see an increase in chances that they will be audited. A Government Accountability Office report released last year shows that the majority of IRS audits historically are conducted on individuals and businesses below President Biden's $400,000 threshold. Given that history, Smith asked Yellen for clarification on whether her directive referred to the total number of IRS audits or a proportionate number based on historical levels. I'm talking about the proportion of those small businesses and families, she responded. Okay, so the proportion, just for the record, the proportion is 90%. So 90% of new audits will be, according to the data, that you could expect 90% of the new audits to be those making less than $400,000. Yellen reiterated that the IRS purpose is to increase the audit rates on high-income earners, but Smith pointed out that the data and suggested it will be broader than that. Reach for comment, a spokesman for the Treasury Department, confirmed that Yellen has referred to audit rates when discussing how Inflation Reduction Act resources will be focused going after the wealthy and corporations for tax evasion. The spokesperson pointed out that the same GAO report referenced by Smith shows that the audit rate for people making between $500,000 and $5 million annually declined by 87%. Between 2010 and 2019. Secretary Yellen has consistently stated that audit rates for individuals making less than $400,000 per year and small businesses will not increase relative to historical levels. So there you have it. They knew it all along. They've been obfuscating their language. They've been using it falsely, and there it is. And they keep telling us over and over and over again. So there we are. So I'm going to ask you first to like and subscribe. Please like and subscribe. We need your help to get this information out. Please like and subscribe. And remember, if you have IRS problems, if you are facing the IRS alone, or if you have unfiled tax return, first thing you should do is get a copy of my book, Deal with Your IRS Problem Today. Go to freeirsbook.com. That's freeirsbook.com. I will pay for the publishing if you pay for the shipping and handling. Go to freeirsbook.com. Get your free copy. So thanks so much for joining us here today. We appreciate it. We will be back tomorrow with Crypto Tuesday, and you won't want to miss that. So thanks so much for joining us, and we'll see you then. Out.